Good morning. Welcome to IG's early morning call. It's Thursday, 23rd of March. Let's take a look at the headlines as we see these markets trade in the wake of the US interest rate decision yesterday, where it went as expected by a quarter point. Dollar falling to a 7-week low in the week. In the wake of that, the Fed changes its stance. We'll cover that in just a couple of minutes. Bank of England is on the slate today on interest rates. We saw that big high print yesterday on inflation. And this has dented what was otherwise going to be plain sailing for the Bank of England today. We'll have to see what that happens midday today. And late last night, Coinbase shares down a whopping 22%. It's received what is widely known as a Wells notice from the Securities and Exchange Commission. And it certainly seems like the crypto firm is firmly on the SEC's radar for examination. Let's look at volatility. It was a game of two halves last night for the Fed interest rate decision. I think that's the best way of putting it. We got volatility down today, but it rose yesterday after there was a hint from the Fed that it still reserves the right to put its foot firmly on the pedal of monetary policy if it thinks that inflation is going to get out of control again. But I think if you look at what's happening on the equity markets, we now have the markets here where we're looking potentially now for a rise. Let's go into 30-minute candles. This is where the markets closed out yesterday's session. We have seen some relatively nice gains since the big drop that we saw in the wake of that decision last night from the Federal Reserve. Since then, money has been going back. But in fact, if the markets open at these levels, at 75.43, we will still see a small drop on the London session when things get underway later on today. There are no really big numbers to watch out for in terms of corporate news headlines that could give us a steer on these markets. So that's where things are at the moment on the London markets, looking for a small loss at the start of today's session. Just one item to watch out for. I think this is for insurers, really, when looking at this number for the FTSE 100. Lloyd's, the world's leading marketplace for commercial, corporate and specialty insurance, today announced a strong set of financial results for the full year 2022. Profitable growth continued with gross written premiums up 19%. And we got a 4% volume growth as well. So I think that underscores what could potentially be some good responses today in the insurance sector. A couple of big insurers on the German DAX. The big one, of course, is the world's largest reinsurance company, Munich Re. 15,191 is where we are on the German DAX moment. Very similar sort of price action to London markets. This is now flirting with potential gains at the start today, but it really is, we could tip either one way or the other at the start of the session in the trading day in half an hour's time. French markets, same sort of price action, recovery on from the lows that we saw late in yesterday's session on the 24-hour markets. Quick snapshot of where we were overnight in the Asia Pacific region as at the close of the session today. The Nikkei was down a touch. Also, so too was the Australian market. The Hang Seng Stock Index up 1.65%. But the action really occurring late yesterday on Wall Street. I want to show you the Wall Street close as we talk about what happened with the Fed yesterday. This was the end reaction to what went on. The Dow down, the S&P 500, the Nasdaq all down by a margin of 1.6%. And it was all because the Fed did exactly what was anticipated. It raised rates by a quarter point. Despite the recent market turmoil in the banking sector, the kicker was that the Fed signaled it may soon call time on its monetary tightening strategy. It raised the federal funds rate to a new target rate range of between 4.75% to 5%, the highest level since 2007. But I want to show you this chart here. Now, this was the Nasdaq. The Nasdaq, when Axel and I were talking about this during the live yesterday, when the Fed decided on interest rates, the Nasdaq spiked up to levels not seen since August last year. If we look at the chart, you can see quite clearly here that the markets moved up, beating the previous high this year on the 2nd of February at 12,896. The market's going all the way up to the highs that we saw yesterday there, very close to 13,000 level. You can see that was the highest print we'd seen in the market since August last year. Then came a big turnaround. I want to show you the 1 hour candles because this is where the action really happened. In the statement, the FOMC said the US banking system is sound and resilient, but there was an uncertainty about the extent of which the fallout from the failure of the two lenders that we've seen recently would hit the economy. But then 30 minutes later, look at this red candle here. You can see here on this 1 hour chart for the NASDAQ, the news conference. The markets were disappointed when the Fed chief, Jerome Powell, got up and clarified that their hands weren't tied and that they can keep raising rates if they needed to. And that's why we saw this big pullback late into the evening yesterday, which is why the European markets took the 24-hour markets down late in the session. But since then, we've seen this recovery underway in the US market. So the net effect of all of this is that we have a green candle on the 24-hour markets at the moment after a really steep reversal of fortunes yesterday. And in fact, all three major markets in the States we've just seen all down 1.6%. And this resulted in what was overall a very big candle, relatively speaking, for the Dow. But we, like the NASDAQ, we are up on the session at the moment. So that's where we are in terms of those markets. I want to show you what's happening on the foreign exchange markets. This is the dollar basket. The dollar basket not really taking anything away from what the Fed chair said. You can see that yesterday's candle were off the lows, but we've got a continuation, this drop here of the dollar against the basket of other currencies. Euro dollar trade, we are very close to this line that I've got here on this chart, which are the highs we had back on the 21st of April 2022 at 109.36. Stopping off today, very close to meeting that. That would have taken us up there to levels not seen since the 2nd of February this year. But quite a strong rally underway here on the euro dollar trade. If you're long on this, stock goes underneath some of the recent price action. Now, that weakness in the dollar has made itself felt in other areas of the market. This is spot gold. Yesterday, quite a strong day, but not as strong as the drop that we saw on the Tuesday this week. But today you can see now that we are picking up on that upward trajectory, and we're just $20 away from the 2,000 level, which is this line up here. In fact, we got that was the high we had there back on the 18th of April. Now, if we go beyond that, we're then meeting the highs that we saw back on Monday this week, where we saw gold tip over the 2,000 level, albeit very briefly. But it wasn't just precious metals, it was base metals as well that saw a little bit of an uplift. And we are now on the fifth day of gains on the price there of copper. So now it's the turn of the Bank of England today. High noon, we get the announcement from the 9 members of the Monetary Policy Committee voting on its decision on interest rates. The picture has been complicated unexpectedly by the strong inflation print that we saw yesterday here in the UK. This and the crisis in the global banking sector leaves Bank of England rate setters with a tough decision on their hands today. I think markets now appear to be pricing in a quarter-point rise, a response to headline consumer prices rising at the fastest rate in 45 years. One factor that will weigh in favour of no move is that some of the inflation was due to one-off factors such as weather-related shortages of fresh fruit and veg that led to empty shelves in the UK supermarkets that we saw in the last month or so, helping drive up prices of food and non-alcoholic drinks at their fastest rate in more than a generation. Now, if the Bank of England look beyond that, it's a relatively benign picture, I think, for inflation. I say relatively. We've still got elevated inflation, well away from the Bank of England's target of 2%. So that is going to be the decision of the day. I want to show you one chart, or a couple of charts actually, worth looking at as we look into this. That weakness in the dollar is making itself felt for sterling against the US currency. We're currently trading at 132.24. Pretty much the highs we've seen, not seen since the 2nd of February this year. So sterling is pushing higher against the US dollar. But we'll also be watching sterling against the euro. It's down for a third day in a row at 112.93 for the euro, for sterling against the European single currency. And some of the other crosses worth watching. I think it's worth looking at the Aussie. In the session yesterday, we saw it tip up at 183.70. That was the highest we've seen sterling against the Aussie since the 2nd of March this year. So that could well be an area of the markets, March last year, I should say. That'll be an area of the markets to watch out for if sterling can push higher against the Australian dollar. Look ahead to some of the economic data a little bit later on today at 12:30 p.m. We get that's UK time. We get the initial jobless claims in the States. Economists expecting 193,000 new claimants. Then at 3 o'clock this afternoon, Eurozone consumer confidence flash data is forecast to rise to to a negative 18.3 in March after a negative 19 in the previous month. So that's looking at some of the economic data, but of course, much will be circled around what's happening with the Bank of England at high noon, and we will be live on the IG platform at 5 to 12 today with Angeline and Chris talking you through some of the moves ahead of the announcement at midday today, where the Bank of England is now expected to raise rates by a quarter point. Now, let's take a look at just one company that's reported earnings. I did mention Lloyd's of London. It's not tradable, but I think it could well be worth watching out for insurers at the start today on that positive number from Lloyd's this morning. But I want to show you this chart here. This is Wix, the home improvement retailer. It's come through with adjusted pre-tax profit down 11.3% to £75.4 million. That's interesting, given the fact the revenue rose 1.8% to 1.56 billion, which saw record sales in the period. And the company says it's made further market share gains, despite the fact that, as I say, pre-tax profit was down 11.3%. Trading, though, it says, is in line with expectations in the first 11 weeks of this year. So Wix will open at 145.6 pence. Not sure which direction this is going to move in. We do have this line of support down here, 142, so 3 odd pence below where we are. And then you've got some resistance kicking in at the highs that we've just seen recently at 153 pence. So we're not too far away from the middle of that band. So it'll be interesting to see whether we get much of a move on from Wix earnings this morning. A couple of US earnings publications today. Just wanted to highlight nothing more than that. Accenture and General Mills out with numbers both before the bell today. You can see there the expectations in terms of figures. Neither stock is all sessions on the IG platform. One stock that is all sessions is this stock, which is Coinbase, the crypto exchange, falling more than 22% in yesterday's trade on the IG platform late last night after it was issued with a so-called Wells notice by the Securities and Exchange Commission. A Wells notice is often one of the final steps before the SEC formally issues charges, generally laying out a framework for what happens next. CNBC said late last night that based on discussions with the staff, the potential enforcement actions would relate to aspects of the company's spot market, staking service, Coinbase Earn, Coinbase Prime, and Coinbase Wallet. Now, this was the reaction that we saw, taking it down. It is only down at levels not seen since the 16th of March. This move up that we've seen in Coinbase reflects the positivity that we've seen for Bitcoin. We can see what has been a 47.7% rise in Bitcoin from the lows we had back on the 10th of March, as Bitcoin acts as a bit of a safe haven from some of the market turmoil. The SEC is, as we know, on high alert in the crypto industry in the wake of the failure of FTX. So this is an area of the market worth looking at. Staying on the charts, just wanted to update you as well on what's happening with crude. Crude oil is up for a fourth day in a row, and we're back up above the $70 level for WTI. Yesterday, we saw US crude stockpiles rising unexpectedly last week to their highest in nearly 2 years, according to the EIA. Crude oil inventory is up by 1.1 million barrels last week, the highest since May 2021. Expectations were for a draw of 1.6 million barrels. That's it. We will be back at 10:30 with Charting the Markets, and again at 5 to 12, I beg your pardon, with the interest rate decision from the Bank of England at high noon. As I said, when we'll get that decision, and as I said, at the moment at least, markets simply pricing in a quarter point interest rate rise in the wake of that very strong figure out yesterday for inflation. That's it. Markets open at the top of the hour, still undecided which direction they're going to open in this morning after those losses late last night on the 24-hour markets.